In 2020, the IRS assessed around $6 billion in employer penalties for business income tax miscalculations or missing payments. Don't become an IRS statistic. Keep watching this Qualified Business Income Guide to learn how Form 8995 helps determine your Qualified Business Income Deduction, QBID. What's Qualified Business Income? The Tax Cuts and Jobs Act, TCJA, of 2017 allows qualifying pass-through income business owners to deduct up to 20% of their share of qualifying income on business taxes. The deduction is equivalent to Section 199A. The Act allows business entities that are sole proprietorships, partnerships, limited liability companies, LLCs, and S corporations to receive this tax reduction. You claim the deduction on Form 1040 by using Form 8995 or Form 8995A. The IRS considers a qualified trade or business to be any Section 162 business or trade with 3 exceptions. C corporations are ineligible because the corporate income is taxed separately from the owner. Services you handle as an employee are ineligible, and specified services, trades, or businesses, SSTB, exceeding the income threshold are ineligible. The primary asset of an SSTB is the reputation or skill of the employees or owner. Those SSTB businesses include athletics, consulting, health, law, performing arts, or trading. Those businesses may qualify for a deduction of up to 20% if their income is at or below the threshold. What's pass-through income? A business's income, counted on an owner's income tax return rather than their company tax return, is pass-through income. This is income that is not subject to business taxes. For 2022, business owners with income lower than $170,050 when filing single, head of household with pass-through business, or married filing separately, or lower than $340,100 for married couples filing jointly before qualifying business income deductions meet the requirements. There are some limitations, but those do not apply to owners qualifying for Form 8995. Form 8995 versus 8995A. Form 8995 is relatively easy. It's one page with 17 lines. This simple version is the best choice if your total taxable income is at or below the pass-through income levels. You may not participate if you patronize horticultural or agricultural cooperatives. Form 8995A is an expanded version of Form 8995. It contains 4 sections and 4 schedules for calculating qualifying income for the business. Using Form 8995A is necessary if your income is above the passable income level or if you are an agricultural or horticultural cooperative patron. QBI thresholds. To qualify for a full deduction, you must do these 3 things. 1. Meet the income threshold shown above. 2. Own a QBID business structure, and 3. Have a business income that falls below the threshold for your filing status. If your income exceeds the threshold, you may still qualify. To qualify, you need to meet additional IRS criteria for determining whether you may take a partial deduction. If your 2022 taxable income is over $440,100 for married filing jointly, or $220,050 for all other filing statuses, your deduction phases out. A phase-out is the slow reduction of tax credits when income is approaching the upper qualifying limit. Some trades, including accountants, doctors, lawyers, and performers, will not qualify for QBI if their income exceeds the threshold. If you're not from an excluded profession and your income is higher than the threshold, you may be eligible but must file using Form 8995A. If your mind is swirling with the idea of making an accurate calculation, you can get off that merry-go-round by calling ERC today. Our business tax professionals can determine your qualifying tax savings and prepare your Form 8995 Qualified Business Income Deduction. Call 313-616-1557 today to begin the process.